All right, so we are going to be looking at ES, which is SPX, and basically how to do key levels. Now, first things first, when I'm looking at my key levels, or when I'm just looking at a chart, we have the candlesticks. The only reason it looks like this is because it's very like stretched out, and I'm on my laptop, not my monitor, so that's why it looks like that. So, what I like to do when I first get to the chart is I like to go to the line chart. Okay. Now, for the line chart, it just makes things a lot easier to see than the candlesticks. For a beginner level, once you get to advanced level, look at the candlesticks because you'll get like more precise levels. Okay. Now, let me move up real quick and let's go over support and resistance. Okay. Now, how does the market move? The market moves in highs and the market moves in lows. So you have high, higher low, higher high, higher low, higher high. Now, if we are in a bearish trend, we got low, lower high, lower low, lower high, lower low. Pretty simple, okay? Now, when it comes down to it, basically we want to look for areas, and this is what I mean when I say a key level. I want to look for an area where the market served as a support and a resistance. Now, let me just briefly go over what a support and resistance is. So this level right here, this is going to be our resistance, and this level right here is going to be our support. Now, why are we calling this line right here resistance, this line support? Well, let's look at the market again, okay? So you got boom, 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 boom. Let's do this. All right, so again, the market moves in higher highs, higher lows, lower highs, lower lows. Okay, so this right here, we can see the market tapped this area 2 times and did not break through. And a way that I'm able to understand support and resistance pretty simple is my resistance is going to be my roof and my support is going to be my floor. Okay, so right here we got to the roof. What happened? We sold down immediately. Again, we tested the roof, and what happens? We sold down immediately. Now let's come over here. We're at the floor, and think of it like throwing a ball at the roof. If I were to throw a ball at the roof, it's going to come back down. If I was to bounce a ball on the floor, it's going to go back up. That simple, okay? So let's think about it like this. I just threw a ball at the floor. What happens? It bounced back up. Let's do it again. I threw a ball at the floor. What happened? It bounced back up. Now let's say I use my full strength, and I throw a ball through the floor, right? And it happens to go through the floor. What happens? It's going to bounce up and then go back down. And this is a break of structure, okay? So at this point, once we break through support, basically we're looking for the market to come back to that area of support, and we're going to, if it happens to break and then retest and then reject, now this area of support is going to be our key level, because at this point it's serving as a resistance, it's serving as a roof. Okay, does that make sense? We can do another one if you want to. Well, we're gonna do more in this video a lot. But yeah, so if you literally go up and you're like hitting your head on the roof, that's resistance. If you're on the floor, if you bounce a ball on the floor and you go back up, that's support. If you happen to break through a level of support or resistance, come back to it and then go with the overall structure, then that is going to be our key level. So for example, this right here, this right here would be a key level because it served as a support right here, and it served as a resistance right here. Okay, so now that we should have a good understanding of support and resistance, now let's get support and resistance and our key levels. Now let's go over how it looks on the actual chart. Okay, so let's go over this current trend. Now right here we have a bullish trend, which means a buying trend, so we should be looking for buys. Right here, we have a bearish trend, which is a selling trend, which means we should look for sales. Now, this overall market right here, when you're moving side to side, you're consolidating, okay? Now, when you're consolidating, technically this is a bit of consolidation right here, because basically, you know, we're not breaking through the highs, we're not breaking through the lows. So basically you're consolidating, and the moves that we take in consolidating markets are basically, we are going to sell at the highs and we're going to buy at the lows. That simple, okay? Now it gets a little bit more, it's not as easy as, like, you know, okay, we're at the high, let me take a sell. Okay, we're at the low, let me take a buy. It's a bit more complicated than that. But whenever you're in a consolidating market, and if you're able to realize you're in a consolidating market, that's how you want to trade. A lot of traders that lose trades, they're taking trades in consolidation. And the crazy part about consolidation, it's almost like quicksand. You don't know you're in consolidation until you're already in it. Until you're like, well, yo, I've been in this trade for 2 hours. What's going on? Now, there's some times where, let's just say if this is a brand new day and you can look to the left and you're like, okay, we're consolidating. Okay, cool. But sometimes you're not going to know you're in consolidation until you're like, yo, I just wasted a whole day and I'm in consolidation. If you lose trades 9 times out of 10 based on my strategy, you were probably in consolidation. So it's your best bet to be able to spot consolidation as soon as possible and try to stay away from it, okay? So let's get into these key levels. Now, when it comes down to key levels, we just want to do our support and resistance. We want to have that same ideology of looking for areas where the market tapped multiple times. But when it comes to key levels, we want to find areas where not only did the market tap multiple times, but it served as a support and a resistance, okay? So what I'm going to be doing is I'm going to be doing this horizontal array. I believe if you come right here, press that, and then you press horizontal array, you'll be able to have the horizontal array. So first things first, it's important when you're marking up your charts, always look left. When it comes down to trading, we're looking at previous information. When we're looking right, we're predicting. When we're looking left, we're looking at previous information. A lot of my zones, if I go to another pair, I have zones back from maybe 2024 that are still valid right now. The market is based off of previous information, okay? So I'm just gonna put this zone, this line right here, just to see how many taps it has. Because I see right here, we have tap right here, tap right here, tap right there, boom, 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 boom. Okay, we have a good amount of taps. Not too many, but let's do another one. Okay, boom. All right, I'm doing this level, and I basically picked this level based off of this right here, and also this right here. I didn't look too far to the right. I basically picked it off of this level, this area right here, because right here, this is a resistance because the market came right there, pushed a little bit lower, and then this area right here, this is a support. The market pushed up, came down, bounced off of it, pushed up, came down, bounced off of it, and pushed up. Now, I didn't even look to the right, I didn't even look way over here, and let me get this arrow just so I can, I'm not sure if y'all can see. But yeah, I didn't even look over here, but you can see like this level based off of this resistance and this support, it seems a bit valid. It's very choppy right now, but once we look at the candlesticks, we'll be able to be a little bit more in depth. So we're gonna have another level. Okay, so before I do that, so what I'm looking at is okay, this is a support, this is a support. Over here, it's a bit choppy, but over here, we got resistance, 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 resistance. We got a lot more resistance. So I feel like I can use that as a level. So I'm going to put that right here. And when I show the candlesticks, then I'm going to be able to have a more in-depth version of this level. Okay, so we're going to do one more. Let's do this area right here. Basically what I see is that it served as a support right here, maybe a bit of support right here, support, it bounced through, came back through, and then went down. So maybe a resistance, support, resistance, resistance, resistance. And I'm picking these levels off of like small little details, and you can see just how they're reacting. So over here is a lot easier to spot. So this right here, support, resistance. It'll look different on the candlesticks. So let's go to the candlestick so I can literally show y'all how it actually looks. All right, and it's a bit hard to see because I'm on my laptop, but I'm just gonna go over how to make these levels a bit more in depth. Okay, so when it comes down to making the levels more in depth, basically you want to put it at very precise levels. So the first thing I noticed was this right here. First thing I noticed this right here. So you have this body of the candle. Look where the two bodies of the candlestick close. They close a little bit above the resistance level. So if I'm using a line chart, if I'm using a horizontal ray, I think I would put this up a bit, because not only did it reject right here, this level it rejected, this level over here it rejected, this level over here rejected. And then as I'm noticing, like, you got this rejection right here, this rejection right here, this rejection, like it's just rejecting in like a multitude of different spots. So instead of using the line is very precise. What I would do is I would use a rectangle, and I would basically go from this body right here where this body closed to this body right here. And let me just change the colors a little bit. Let me do a different color or something. Okay, boom. All right, so I would go like this. So I'm gonna get rid of this line, and I would just stretch it all the way out. And I would just keep going. Like, I would stretch it as far as possible, and then whenever I have, like, later on in time, I would just keep stretching it, because I know for a fact, like, the market reacted to this resistance area. Okay, so that's basically that level. We got resistance here. It's all over the place, okay? And it's at different levels. You got some that are higher, some that are lower, but at the end of the day, this rectangle basically shows me, okay, if the market gets into this area, cool. If the market gets into this area, cool. But if the market breaks above and then breaks through, okay, now that's a break of structure, break and retest type thing. So let's get rid of these circles, and we're going to do another rectangle. Now this is going to be a key level, because this serves as a support and a resistance. And basically the way I'm doing it, I'm doing the body, like the body highs of the resistance and the body lows of the support. So let me move this right here. Okay, so this is the body high, and then you have this right here. This is a support because the market broke through, tapped it. Let me try to zoom in a little bit so y'all can see it better. The body broke through. Well, I can't see nothing. The body broke through, tapped it, rejected, and then pushed back up. Okay, so that's why I said that as a support. All right, let me get rid of this. Okay, then we have another one, tap, not too much. We have the market breaking through, rejecting, pushing lower, not too much. Okay, and market tap, so it's serving as a support, serving as a support. We have a gap right here. We'll go over gaps in another video. Right here, we can keep stretching that. So this is more of a resistance, a bit trickier resistance, because they did break through, but at the end of the day, this is going to be our key level. It's not going to be too precise, but at the end of the day, as long as we know exactly where the market is showing, interest, where the market serving as support and resistance, we'll be okay with taking a trade. Because at the end of the day, we take our trades from zone to zone. That's how we take our trades, zone to zone. Okay, so this zone right here is a lot cleaner, and this is going to be another key level. So we're just going to do our rectangle, and then hold on, right back at 1448. All right, so we're going to do our rectangle, and we're just going to stretch it, and then we're going to go over exactly why we are doing these key levels. Okay, and this is going to be a lot cleaner. I could just see it already. All right, so we have support right here. A little bit of a support. It goes a little bit deeper into it, but that's okay. We got support right here, resistance, if you're just black line. Resistance, the market tapped into it. We have another form of support, another form of support, another form of support. It's rejecting pretty cleanly right here. I'm gonna pull this down just a little bit because the body of that candlestick right there, I don't know, that's just something that I do. Like, I like to pull the support, I like to pull the key level at the bodies of the candlestick and just let the wicks like just flow down. That's just something that I do. Tap back into it, and then you have this area right here, this massive consolidation. But as you can see, you got resistance, 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 resistance. It did break out of that, but at the end of the day, like, we know, like, we would want to take our trades from this level. And then you got support, resistance, resistance, resistance. So pretty simple level. This is consolidation, so of course the market's going to be a bit uglier in consolidation, but